Hi guys, I'm Jay, CEO of OKEX. Here's the OKEX DeFi Roundtable, a virtual talk series to invite DeFi projects from different segments to have a chat on their current progress, insights, and future developments. Last week, we have Corey Caplan. So the CTO of the DeFi money market, he was with us to discuss how real-world assets can play a vital role as a collateral in DeFi lending and yield farming. So let's move on to another important player in DeFi besides lending, liquidity. So today, our topic is ride the wave, the present and future of decentralized liquidity. We're more than happy to invite two experts from two inspiring decentralized exchanges, Nate Hindman from Bancor and Jay Zhou from Loopring. So Nate and Jay, can you introduce yourself and your project as well? Nate, do we want to start?
Sure, yeah. Great to be here. Thank you so much for having me. I work on Bancor Protocol. Bancor is a fully on-chain liquidity protocol that's focused on Ethereum, and it is exclusively based on a new primitive called automated market makers. So that allows users to collectively pool their liquidity together and to enable other traders to perform automated on-chain algorithmic trades.
Okay, that's very innovative. I would say it's very innovative. Jay, you have a different. Could you weigh in on this? Introduce yourself. Hello, Jay.
Sure. Hello. Yes, yeah. I can hear. Okay. I'm Jay, co-founder and CEO at the Loopring Protocol. Prior to Loopring, I work for consulting and PayPal for a couple of years, and I got into crypto business since 2013. Started by Bitcoin, and then trying to convince more people to get into crypto world. About Loopring, Loopring is the Ethereum's first and the only zk-rollup decentralized exchange right now, and we use a technology called zk-rollup to scale up the Ethereum throughput. And the Loopring decentralized exchange is completely non-custodian order book based exchange.
Oh, that's very unique. So it's order book. It's an order book model. Okay. DeFi has become the center of attention for many of us in crypto space, and including lending and the DEX. Recently, we saw a piece of surprising news that the DEX are outranking many established decentralized exchanges in terms of daily volume. As huge players in the DeFi space, what do you think? Is it merely a fad, or can we expect more of this in the future? Nate, you want to jump in first?
Sure. Well, I definitely don't think it's a fad. I think for the kind of early phases of crypto, a lot of folks were focused on building all sorts of types of applications, everything from, a crypto-based Airbnb to a crypto-based Uber to all these different applications. And decentralized finance is really a sort of refocusing of the space, specifically on the financial use case, from exchange to derivatives to lending. We're seeing that we can perform these services really with the community's participation, that large amounts of people can pool their capital together and can really own a piece of the protocols and of the projects in sort of new ways that are getting really re-envisioned through decentralized finance. So while there is definitely a lot of hype and a lot of new players flowing into DeFi, I think the fundamentals are truly here to stay. And it's been quite amazing to see, at least from the exchange perspective, that we're able to kind of offer competitive rates with sort of centralized exchanges that, I guess a lot of that is driven by automated market maker based exchange. And we can really drive down the prices of purchasing and trading tokens through these new kind of models. So it's been really amazing to watch, especially I'd say in the past 3 to 6 months.
That's very good. Very good. Jay, you care to weigh in on this?
Yeah. I completely agree with Nat. Like we can see trading volume on the decentralized exchange, which nearly 6 billion. And it's an increase of over 400% compared to first half in 2019, and almost like 140% over compared to 2019 yearly figure. And we believe that the decentralized space is still in an immature state. So the increase in market trading activities in this year is coming from new entrants, like new DeFi users. So according to like Matthew effect, Matthew effect is like the stronger gets stronger, the weaker gets weaker. It has not been demonstrated yet in this sector. So we think, and we strongly believe that the continuous development of the DeFi space and also DEX, decentralized exchange space, will continue, and it will create it's called ripple effect that will influence this DeFi space in all aspects that were including innovation of like the recent boom like the AMM and also ETH farming, those kind of stuff, and also will improve the governance mechanism and also the project economic model as well.
Right, I agree with you guys absolutely, and I do see a lot of growth in the decentralized exchanges in the future, and let's move to the next question. We understand liquidity is one of the core engines in the entire DeFi ecosystem, and decentralized exchanges are acting that role. Different DEXs present a unique opportunity to rethink how to design an exchange from scratch based on their own principles. There are some models for designing a DEX like order book model, automated market making model, and Dutch auction model. And I understand Bancor adopts ecosystem of innovative AMMs, that's automatic market making models, to build an exchange of optimizing the pricing curve using amplification coefficient to dramatically reduce slippage, whereas Loopring works by pulling all the orders sent to its network and fitting these orders using the order books of multiple decentralized exchanges. So what are the strengths of each of these two DEX models? Jay, you want to weigh in on this first?
Yeah. As I say, Loopring exchange, Loopring decentralized exchange is the Ethereum's first and only zk exchange right now. It is complete non-custodian, decentralized order book based exchange. That means the user can trade speedily and cheaply without worrying about the Ethereum congestion and gas fees, while maintaining, and also Loopring acts as a payment application as well. It's an additional feature for zk technology. It supports the recent launch, support by the recent launch Loopring pipe, and everyone can send Ether or ERC20 token to any users on zk layer 2 instantly, cheaply, and securely. I just want to say the Loopring exchange, the strength for Loopring decentralized exchange is the fast pay, low cost, especially when, like, these days Ethereum gas fees being ridiculous high. The GY was over 100 yesterday. So instead of using a layer 1 decentralized exchange to pay like $10 gas fee, to make a trade on layer 2 exchange is completely, it's not free, but it's almost like free. It's like a few cents per trade. And the speed is nearly instantly. So that's our strengths.
It's very good. It's very impressive. Nate, you care to comment on this? You have different opinions?
Sure. Definitely recognize the huge importance of layer 2 technologies, especially in recent weeks with gas costs getting particularly high. And I think it's definitely a big priority for Bancor and other layer 1 DEXs to integrate and set up these pilots with these layer 2 solutions. And so really recognize the importance there. I would say on the what distinguishes an AMM or automated market maker based exchange is really, up until now, the liquidity on exchanges has come from professional market makers that have large amounts of funds, or whales that are acting as market makers. And the real innovation of automated market makers is that any everyday user can create liquidity or can do market making. So all of a sudden we're seeing a democratization of liquidity, and that we're seeing liquidity can really come from everyday users who, instead of just holding their tokens in their wallet, they can provide, or let's say lend or stake their tokens inside an automated market maker. And each trade that the automated market maker performs, the liquidity provider, the everyday user, is generating a small fee. And they can also receive, let's say, yield farming rewards from staking their liquidity and providing their tokens to help with an individual token's liquidity. So I think this fundamentally sort of changes exchanges, whereas before it was, a high capital, high technical barrier to being a market maker. All of a sudden, you can just be a market maker in a couple clicks. And because, you have these on-chain reserves and it's managing, there's really no order book. They operate without order books. Users can act as market makers just by staking their tokens and leaving it. And they don't have to manually operate a market maker. And I think that is allowing us to really build user-owned exchanges and giving token holders a new way to interact with the projects and to provide liquidity to those projects. So I think those dynamics will really end up creating the most liquidity, and that's why we're seeing some of these AMM-based DEXs, including Bancor, providing prices that are competitive with order book-based models. And then I think a last point is, it's also for the trader's experience. You're getting sort of this instant liquidity where you don't need a counterparty. And in tokens that have maybe low volume, or their order book is inconsistent, when in the early days of a token, you can't easily list on an exchange. You don't, even if you do list on exchange, you can't access market makers to create that liquidity. When you can rely on your community to create that liquidity for you, it's providing that sort of early stage automated liquidity for your community. So so I'd say those are the kind of key benefits.
Oh, that's so the users will be feeling they're part of the ecosystem.
Exactly.
They get more involved and
they're incentivized to get involved not only through the fees but also through staking rewards called yield farming, I guess you could say.
Yes, that's right. Tell you what, I actually like both models.
Definitely.
I like both models, and let's move to the next question. So let me see. In recent years, we can see decentralized exchanges have been evolving and finally overcoming some barriers like liquidity thanks to DeFi. What is the next one barrier the DEXs have to overcome to achieve further mass adoption? User interfaces, security flaws, and what else? Jay, you want to weigh in on this?
Yes. As I explained from the previous questions, gas fee right now is quite high. It's kind of block a few people from using decentralized exchange because you have to pay like $10 or even more gas fee for make a trade these days. And also the user experience. DeFi product is still not that user friendly because people have to start to use MetaMask or the other wallet to self manage their private keys, and it's not yet acceptable to the traditional users or to the regular market yet. So in my opinion, I think if we want to have more or mass adoption for DeFi products, we have to completely improve the user experience to make the onboard process much more friendly, much more easier for people to use. So even like my mom can, use DeFi, use Uniswap to place the trade or to trade on those decentralized exchange. She's a traditional stock and traders, but she definitely don't know how to trade on DeFi. We now have the smart wallet. So the smart wallet can help people to get rid of the private keys, and just by using your own mobile phone number or email to register an account, and all the private key will be stored on a smart contract. And I think it is already really close to the traditional internet product. And I think once we have a ready, we can see another wave of DeFi adoption.
Nate, you care to jump in and?
Yeah, definitely. I do think that it really comes down to pricing and cost. If you look on, other types of exchanges and prices are cheaper, I think naturally as a user, you're going to, even if the user experience is a little, a little more difficult, there's a couple more steps. If the prices are cheaper at the end of the day, I think you're going to flow there. And really the key, as we've noted, is, the more liquidity you have on an exchange, the cheaper the prices are. And, the sort of real way to, I think, bring that type of liquidity is to allow, more users to provide it and allow more opportunities for market making. And I think for your everyday user, the idea of market making is not really top of mind. They're focused on, at least traders, getting a return on their tokens and trading different tokens and participating in the applications. Now, all of a sudden, I think there's been a huge flood of liquidity in DeFi because there's, huge returns that can now be made by acting as a market maker. You're seeing, 500%, 800% annual percentage returns just for staking your tokens in a smart contract. So I think as a lot of users start to see these massive returns from acting as a market maker, it's going to be more natural to them, and they'll start to see it just kind of like lending out their tokens on a lending protocol. They'll sort of see market making as in that respect too. So I think that it's really sort of changing this kind of user behavior to let them know that you can not only lend your tokens, it's not only holding your tokens, but you really want to be putting them to work in a certain way. And market making is potentially one of the more lucrative ways that you could do that. So I think, changing that sort of user behavior is going to really drive adoption a lot.
Yeah, I totally agree with you guys. And I couldn't agree with you more. And it's a fascinating, and it's everything is moving in fast pace, and I guess I can feel the future coming. My next question to you guys is actually it's about the security. Security concerns is still remains an obstacle for the widespread adoption of decentralized exchanges, as reflected by the recent hacks of the balancer, and I think you all know that. And like centralized exchanges, how can DEXs give users more confidence in preventing hacks from a technical perspective? Nate, what's your take on this?
Sure. So I'd like to think there's the concept of anti-fragile, right? The idea that the more you stress something and attack it, and the stronger it becomes, right? It heals from these attacks, and the stronger it becomes. So I think we're still very much in a anti-fragile space with DeFi. You'll notice that whenever there's a smart contract vulnerability, unlike centralized institutions or sort of traditional financial institutions, there's kind of limited transparency into really what caused the problem and how we can prevent it in the future. In the DeFi space, since most of these products are on-chain, open source, it's really in the ethos of the industry. Whenever there's a vulnerability, everyone knows exactly what happened. You can sort of track it in real time. And so anytime there's a vulnerability, there's just tons of analysis, right? And I think this is part of the process of becoming anti-fragile, is to see these things happen in real time, know exactly how to prevent them or reduce the risk in the future. And then all of a sudden, every sort of DeFi project can adapt and change their systems to ensure that they're protected against these risks in the future. But at the same time, no audit or no amount of bug bounties is 100% bulletproof, right? So I think the non-custodial nature of a lot of these projects for the traders is really crucial, that you're not giving up ownership of your tokens. They're remaining on in your wallet. And if you are acting as a liquidity provider, you're doing so in a way that you sort of fully know the risks and you can kind of measure them as a user. And I think the transparency and the open source nature allows users who are providing liquidity and locking up their tokens in these smart contracts to really measure those in a better way.
Oh, that's well said. That's well said. Jay, you care to weigh in on this as well? Jay?
Yep. Yeah. I do agree. Hello.
Yeah.
Yes, I do agree. There's no 100% proof system yet. Even to be honest, even centralized exchange got hacked sometimes. So I would say, speaking from a project's perspective, I think what we do is our takeaway is we spend a lot of money on security auditing to improve our smart contract security. We do invite and use different auditors, external auditors, to come to review our smart contract. And we also give a lot bounty program to the communities and invite all those talent people to come to review our smart contract. Yeah, that's our takeaway. I think there's not much things we can do in this space right now.
Okay. Would you guys feel it's more secure than centralized exchanges, or less? What's you guys' take on that?
I think it depends who you are, what actor you are in the ecosystem. As a trader, I would say it's more because you're retaining custodianship of your tokens. You're never giving up ownership just that second that you're making the trade. Mm-hmm. Whereas, holding your tokens on a centralized exchange, you don't have ownership, right?
Right.
As a liquidity provider, you are taking risk. You're putting your money in a smart contract that there's always a possibility for smart contract bugs or failures. I think they're happening, hopefully less, but you're rewarded for that risk. It's a high risk, high reward. And as a liquidity provider, like I said, you can generate really high yield and APR, like 800%, 1,000%, really crazy stuff. But you're taking a risk that there may be some sort of smart contract bug, and you hope that the protocol has been audited enough, stress tested enough, been around long enough to prevent against that. But yeah, again, I think it really depends on what role you're playing in the ecosystem.
All right. Well put. Jay, you have any comments on that? Jay? Jay?
Yes. I mean, I do agree as well. It really depends on. Hello.
Yes.
Hello. Can you hear me? Okay.
Yes.
Okay. Good. Yes. Yeah. Yeah. It really depends though. If it's like a big exchange, like OKX, I mean, like people. So, but if some kind of unknown centralized exchange, they have no reputation, they just launch in a couple of weeks, then there's a huge risk for traders, for users to send deposit token on those kind of platform, because they have the potential or the risk of take the money and run away. But for decentralized exchange, it's fully non-custodian, so you are on your own. you won't worry about the risks from the centralized exchange being away. The only risk is the smart contract. So yeah, it really depends case by case.
Okay, yeah, I agree with you. Absolutely. Let's talk about a little bit about Ethereum 2.0. At present, most of DeFi applications are running on the Ethereum. Many DeFi lovers are anticipating Ethereum 2.0 will enhance its scalability and security. So, in what way will the launch of Ether 2 help the development of decentralized exchanges? Jay, you want to jump in first? Hello, Jay?
Hello. Hey, hello.
Hello, yeah, I can hear you. Did you hear my questions? Do I need to
Yes, yes. I'm good. I'm good to go. Yes, I mean, like, to be honest, like Ether 2 is still a long way to go. Even if you follow up Vitalik's Twitter, you can see he constantly encourages people to use zk right now, because Ether 2.0 won't come anytime soon. May take another 3 to 5 years for practical user case. Right now, there's the only way is the roll up as a scaling solution for people to use, and I want to explain to you the roll up solutions. Right now, there's different kind of, even there's a sidechain solution as well, but I think zk rollup is the right now at least is the one of the best way for you to choose to scale up your throughput, because zk rollup won't give up any security for your project. The zero knowledge proof technology is a layer 2 scaling solution on Ethereum, allowing much higher throughput and transactions per second and much lower costs without sacrificing securities. And Loopring and Meta Labs have already built a zk rollup that allows user to process transactions instantly and in a very cheap way. And as long as Ethereum exists, all your assets are completely in your control. And right now, it already 1,000 times faster and cheaper than the normal layer 1 decentralized applications.
Right. Okay.
Yes. So my takeaway is yeah, layer 2 is still far away. So why not use the current solutions?
Yeah, I understand. That's well put. Thank you, Jay. Nate, what's your opinions on this?
Yeah, I think we feel somewhat similarly. We're very excited for ETH 2.0 to dramatically bring down costs and to dramatically increase throughput, but we're not waiting around for that to happen. We're actively, looking into integrating these layer 2 solutions to bring down those costs before ETH 2. And very excited for ETH 2 to finally get delivered. But like we've said throughout the whole conversation and in the past few weeks, gas costs really threaten DEXs and DeFi applications, both from a trader's perspective and also from a sort of yield farmer's perspective as a liquidity provider. When you're trying to optimize and balance yield between different protocols, you need to ensure that your returns aren't getting sort of chopped in half by the gas costs. So excited for ETH 2 on the horizon, but we're not holding our breath and actively integrating different solutions and optimizing our own smart contracts to really reduce gas consumption.
Right. Okay, that's very good. I like the idea of you putting the bet on the Ether 2 come out and bet everything on Ether 2. You just go along with your current roadmap and building from that and so this minimize the risk in the future.
Definitely.
Okay. Some people may think centralized exchanges are only the direct competitors of DEX. And I don't think so. And our relationship is more like partnership right now. So what do DeFi projects hope OKEX will do to make a DeFi space more attractive to centralized players? You guys care to weigh in on that? Nate?
Yeah, definitely. Well, I think that centralized exchanges are natural players to integrate a lot of these DeFi protocols. I think we're already starting to see centralized exchanges building interfaces that allow users to stake their tokens. When I buy my tokens on a centralized exchange, why not stake them as well? Potentially on, if I buy a DeFi token and I want to put it to work and generate yield, it seems like centralized exchange interfaces are really natural places to do that. So if I want to stake my tokens inside an automated market maker to generate yield, or, and if I could do that within my OKX dashboard, I think that would be really exciting. And a user doesn't have to leave the OKX platform to do that. So that's my hope, is that with all these different DeFi assets and the composability, the level of innovation is really off the charts in terms of yield farming and attracting yield. I think potentially some of the DeFi protocols are really less focused and have less capacity to build these extremely smooth user experiences. And it feels like there's a natural fit for those user experiences within the centralized exchange interfaces. So I hope that those types of partnerships will increasingly emerge.
Oh, that's very good. I couldn't agree with you more. And then Jay, what are your thoughts on this? Jay?
Yeah, besides that part, I also, hello, hello.
Yes.
Yes. Besides that part, I also, from my opinion, I also hope the OKEX can keep bring more users from real world, and so they can bring their assets in from real world to the cryptocurrencies that will increase the entire crypto ecosystems, and educate them about the cryptocurrency, because we all know, like, it's not like from people is not from zero to DeFi straight away. Most of people like me, we are from zero to cryptocurrency, then to DeFi. So DeFi is more like for advanced users. So if OK can bring more people into the cryptocurrencies, that means we have more base to educate people, to escalate them or to upgrade them to DeFi users.
So Jay, would you say, I'm just putting out an analogy. Would you say, actually, the question for both of you, would you say DeFi is more like standing on the giant shoulder, like CeFi, and grow from there, and in the future, basically they moving forward in parallel, and so the partnership is very strong, and they complement each other, and so I'm not sure. What are your takes on this? Nate?
Sure. Yeah, I can go first. Definitely see. I think I see custodial and centralized exchanges, like Jay said, really as a gateway for not only retail users but also institutional users. That they sort of not only build a sort of fiat onboarding and the user experience, but also it creates a sort of compliance layer that allows a lot of institutions to participate as liquidity providers and part owners of these DeFi protocols. And they really require the custodial and compliant layer that centralized exchanges offer them. So I definitely see it very much as a gateway for into DeFi, users coming in through these centralized exchanges and interacting directly from the centralized exchanges with the DeFi protocol layers.
Oh, I like that better. I like that better. Jay, any comments on this?
Yes, I mean, like we see us as a bunch, though we are decentralized exchange, but we never see, I always say to my team and to the industry peers that a decentralized exchange will never become a competitor to a centralized exchange. We are more like a supplement, like DeFi is more, I see it as a supplement for individuals. Centralized exchange can focus more on institutional investors, and we provide opportunities for decentralized exchange, people who cannot do KYCs, or they only have a mobile phone, they don't have some kind of identification, then they can use DeFi product.
Okay, that's very good. That's very good. I like what you guys said, and 2020 is harvest for DeFi projects. So what is your plan for the rest of this year? Any projection towards the whole cryptocurrency and DeFi industry this year? Jay, you want what's your take on this?
Yep. So for us, we are right now really focused on our mobile end. So all our resources and focus goes to our mobile application launch. We will make a smart wallet, a mobile application, feature the trading decentralized trading functions. So we see we still believe in the decentralized exchange. It's great, but we see it's more like a feature it's like an add-on for a mobile application, like a wallet. And we see a smart wallet, as I explained before, a smart wallet can help you to get rid of the, not get rid of, but will help you to take care of the private keys and become a completely traditional internet product. Will help, we see a huge potential on that people can easily use and onboard the cryptocurrencies. So our focus is the mobile end applications, smart wallet plus decentralized exchange.
Oh, that's very good. When do we expect the mobile version come out?
We already start the internal testing. Once our first batch testing finish, then we will invite more people. So I think we will have a public test ready by the end of, or by the beginning of, I think September.
September this year. Did you say September this year, Jay?
Yes, September this year. Correct.
Okay, that's very good. I just cannot wait. Can't wait. Nate, what's your take on this?
Yeah, so you actually catch me at a very interesting time. We're in the final stages of testing, and we are about to release the second major protocol version of Bancor V2. I think if you think that, we've seen AMMs really explode, this like wave of DeFi liquidity coming from regular everyday users, but I really think something like a tsunami is coming, where it's going to be way bigger than this wave. A huge amount of liquidity we think is coming into the space, and Bancor V2 I think will play a key role, because up until now, even though AMMs have proven to be extraordinarily exciting for everyday users to provide liquidity for their favorite tokens, there has been a good amount of friction, and the primitive itself has been somewhat capital inefficient compared to order books. But all of a sudden, Bancor V2 really removes a lot of the friction for liquidity providers. For instance, they haven't been able, when they want to provide liquidity, to retain 100% exposure to the token. They've had to split their exposure into a separate reserve asset inside the AMM, and Bancor V2 allows users to provide liquidity but also maintain 100% exposure to that token, so maintain their long position on the token. So then on the capital efficiency side, we're really starting to experiment and seeing the power of algorithmic and sort of code-based liquidity, automated liquidity. We can actually change the pricing curve of an automated market maker to give it sort of amplification. So it acts like there's 20x or 30x the liquidity inside the smart contract, which dramatically brings down the price slippage and the cost, and dramatically sort of increases the capital efficiency. So you can, create way more cheaper prices with way less liquidity. And Bancor V2 is coming. It's getting released to mainnet. We've been in an open bounty phase for a few weeks now. The final testing is happening. So any day now, Bancor V2 is getting released. And then very shortly thereafter, the Bancor DAO is getting released. And that's really the step where we transfer all ownership and control of the protocol to BNT holders, where they can, with their BNT, vote on upgrades and execute the upgrades on chain with their holdings. So, and I think that really highlights a broader trend inside DeFi, which is the distribution of ownership of the protocol, the creation of a DAO, so shifting from sort of this foundation model to a real DAO-based model that allows any one of your holders to participate in governance and really dictate the sort of future development and growth of the protocol. So that's really what's on our roadmap. And any day now, Bancor V2 is coming to mainnet, and we're super excited for sort of this next chapter for the project.
That's very exciting. That's very exciting. From the story I heard from you two, it's just like it's going to be very exciting years, and everybody, and not everybody. I mean, you, both of your companies are launching a unique features and new features and a mobile version and the Bancor 2, and it's exciting time. It's exciting time. And my last question to you is, suggest one word to describe the future of DeFi and why. Nate, you want to start?
Sure. Sure. I'd say my one word is access. And that's not only access to the services themselves. So it doesn't only, I'm not only referring to it being easier to trade, for instance, but access in terms of ownership. So all of a sudden, many users, unaffiliated users, can own a small piece or a big piece of a DeFi protocol and participate in governance and generate a share of that protocol's earnings, which happen fully on-chain, fully in a transparent manner. And this sort of distribution of protocol revenue requires you being fully on-chain and transparent and decentralized protocol. So the access to ownership amongst an unlimited number of unaffiliated users, I think, is an extremely powerful concept and something we'll only see increase in the months and years to come.
That's a very good word. It's a simple and covers a lot of aspects of the blockchain. And Jay, well, what's your word? I really want to hear from you.
Yeah. To be honest, well, I don't have a specific word in my mind at the beginning, but I was thinking something that would be like accessible to individuals in the future, then come up with a perfect word exist. So, but maybe I can say leverage. Leverage, because DeFi now can help us to create a leverage in a much easy way. So that's probably the fascination of the decentralized finance. So, but yeah, I mean, like I do think Axis is kind of perfect to describe the future of DeFi.
Okay, leverage is good. I like leverage. I think any word, and the blockchain is by imagination, disruptive. So a lot of words will fit into this in this realm that and it would generate a lot of sparks and imagination and creativity, and even simple words like access and leverage, or it's they're all very imaginative, I think. Well, today we cover a lot of things, and you know, we talk about the ride the wave, the present, future, and decentralized liquidity, and we talk about the models and all that, and it's very exciting to have two inspiring decentralized exchanges. Nate Hindman and from Bancor, and Jay Zhou from Loopring, and it's my privilege to have you guys here, and I think that pretty much wraps wraps up the AMA session, and hopefully we can have a further discussion later down the road. And I want to see how you guys doing. I want to see you guys succeed. Really, it's the more you succeed, that means the blockchain has more adoption, mass adoption, and so for the DeFi is I think DeFi could be huge, and I really want to see that happen. Yeah, so I guess that's it. Thank you guys for coming. Have a good day.